we can start. Welcome again to our webinar for today. And please help me welcome our speaker for today, Dr. Amina Ebrahim, who is a research fellow at UN-WIDER. And Amina leads the Domestic Revenue Mobilization Program under SATIDE and UN-WIDER. And she has worked extensively on inclusive economic development. And her research focuses on employment, tax, and social policy. Her recent work is on evaluating South Africa's youth wage subsidy using tax data. And today she will give us insights into the ETI's impact on youth hiring. And I'm not going to go over her whole CV because it will take us the whole day. But I'm just going to hand over to you, Amina. You can start giving us your presentation and share your insights. Thank you.
Thanks, Nabuja, for that very generous introduction. It's really great to be here and have this discussion. I'm really impressed to see that 55 people joined this afternoon, a Friday afternoon, to hear me talk about the employment tax incentive. It's something I've worked on for a long time, and hopefully I can share some of that with you. Okay, so let's see. How do we get started? Just shuffling some things around on my screen so I can see my own notes. Okay, so my name is Amina Ebrahim. I'm a research fellow at UNU-WIDER, based in Helsinki, but originally from Cape Town. Not sure which, sometimes I say punishment led me to this very cold place, but at the moment it's very sunny and warm in Helsinki, and I understand it's quite the opposite for those of you at least in Pretoria. A couple of disclaimers before we get going. I'm an hour ahead, and so I think my kids are probably going to come home in the next half an hour or so, so you might hear some background noise at some point. Yeah, I'm working from home today. This is work. I'm going to present some work that I started already in 2015. And so if there's some details of the very earlier work that I forget, I hope you can forgive me. Some of those very detailed estimations are, sometimes hard to kind of recall, but are all in the public domain and accessible. So this whole presentation, I'm very happy to share it. And it's actually got lots and lots of hyperlinks in case it's useful. And then to those of you who know probably a lot more about the policy and changes in the policy more recently, this looks like an audience who's a lot more experienced in this space than I am, and I haven't really followed some of the recent policy changes or legislation and what's actually in legislation and what's happening in practice. So, I mean, I'm happy to take feedback and update this. I don't profess to be the expert on this at all. Just sharing some of my knowledge. Okay, so I'm going to start with a little bit of a description of the policy, and then I'll talk through a little bit of the subsidy, a couple of the subsidy changes over 10 years, and maybe what that's meant. And then just a brief slide on kind of the theoretical prediction. So, how are wage subsidies going to work, or are they supposed to work? What's the expectation? And then we look at the literature to see what the reality has been, both internationally and locally in South Africa. This is actually, it's quite a lot of results. I'm going to take you through, I'm going to look at a handful. And as I mentioned, the research is all available, so there's a lot more. Then just to kind of summarize what we know and what we don't know, because while there's quite a bit of work that's being done, I think there's still a couple of gaps in our understanding. And then thinking through some of the key takeaways from all the literature that I've been able to look at, and then what I consider as some ideas for the way forward. So I'm on presenter mode, and so if somebody is raising their hand or is putting a question in the chat, I am not going to see it. But if you just speak up, I'm happy to just pause and take a question. Ideally, we can do clarification questions while I'm presenting, and then I believe there's quite enough time to answer more detailed questions and or listen to your feedback. Okay, so the policy setup, for those who don't know, the employment tax incentive was introduced in January 2014, initially with a sunset clause after 3 years. It had been renewed then for a further 2 years, and then later again renewed for an additional 10 years. So the policy is ongoing and it continues, but it's changed over time in both the cutoff amounts and as well as the actual subsidy value, but it's ongoing. Who is the subsidy or the tax incentive for? It's targeted to the employers of young workers. What do we mean by young? Those aged between 18 and 29 years old. And then in the literature or in academic work, we call these rather like low wage or low skilled workers earning less than 6,000 Rand per month. I've used that 6,000 Rand mark with a little asterisk because I know the policy has changed, and so that number has changed. But when I started the work or looking at this work in 2014, it was 6,000 Rand. But I'll take you through the changes in a moment. So we think about this as a temporary subsidy with a 2-year duration. Subsidy, what I mean by temporary, subsidies in other countries are sometimes for much or endless or longer period of time. And initially, I guess this started off as what seemed like a hiring subsidy. So these were for new employees, but there's a lot of turnover in the labor market for young, low-wage or low-skilled workers in this group. So this is how it's being described. In terms of the value of the subsidy, and again, I'm going to get into these details, the subsidy is actually halved in the second year of its being claimed. It's targeted to private sector employees, and how the ETI works is it kind of reduces the cost of hiring young workers and through providing this tax incentive, and it's channeled through the tax system or the PAYE system, or tax credit, and this additional money, the subsidy that firms get, allow firms to then employ additional young workers. And this is in the theoretical implication or theoretical predictions, but just to give you a flavor or sense of how this goes. It's one of the few tax incentives targeted at reducing the cost of labor rather than capital. So slightly more macro view on it. And then, some of the amendments have been around inflation, compliance, and then extending, of course, the timelines, which I've mentioned. Overall, and having not thought about this policy or this research in a long time, just going back to this, it's actually, I would consider a well-researched policy. There's a lot written on the policy. Okay, so in the first phase, which I'm going to call phase 1, January 2014 to Feb 2019, the subsidy in its first year was 50% of the salary, so 1,000 Rand for those who earned up to 2,000 Rand per month. And then it was a flat rate, so we call this like the plateau. It's a flat rate of 1,000 Rand if you earn between 2,000 and 4,000 Rand. And then this kind of phase out is this last section between 4,000 and 6,000 Rand per month. So this is maybe quite different from some of the other policies you see abroad, but this is how it was designed, and it continues to go in this way. There's one flat rate moment, I think, during COVID, which I'll highlight as well. So that's the blue solid line. The blue dashed line is where the subsidy is halved in the second or the next 12 months. So from months 13 to 24. The categories remain the same, but the actual subsidy value is different. Then in March 2019, I think this is until Feb 2022, the subsidy value had been, the cutoff values had rather been increased. So you see that the shape remains the same. The plateau amount, the subsidy value is again still at 1,000 Rand. So we're looking at the orange solid line here. But the cutoff now moves from 4 to 4,500. I actually attempted to put all of these changes into one graph, and it looks super messy. But maybe I will try again at some point. And then you'll see again that phase out section of the subsidy claim kind of tapers off at 6,500. So that was let's say the main change. Then during COVID, the subsidy changed substantially, and I believe, so the blue line is the one for regular, kind of what it was in phase 2, so trying to benchmark against. And that's like a kind of what it was on the previous graph I showed you. So this was from April 2020 to July to 2020. So the subsidy actually went up to 87.5% of income. So, you're talking about 1,750 Rand subsidy for somebody who's earning around 2,000 Rand. And then it's a plateau, and I guess it tapers down. And it kept those kind of cutoff and phase out points of 4,500 and 6,500 Rand. You'll see this kind of last category after 24 months or age 30 to 65. The subsidy was extended beyond the 2 years, so not really a temporary subsidy anymore, so a continuous subsidy. And the age criteria was also lifted, so a subsidy for all employees. This is quite common in periods of economic downturn in countries when they're trying to retain jobs. So this is, the policy can go, is often used in 2 ways. One, it's to create jobs, which is what South Africa needs, but it's also used in some countries to retain jobs when there are economic challenges. So this is one example of how that's been done here. Okay, and then I understood that the subsidy, during the interim period, which I think, what was that, July 20 or August 2020 to August, 2021, it reverted to that phase 2 amount, but I couldn't find details about this. So I, stand to be corrected. In the second phase of this kind of COVID subsidy value or subsidy change, the amounts stay the same, the cutoffs remain the same, and I see now there's oh no, it's correct. The cutoffs remain the same, but for those, in terms of they've exceeded the amount of time in their subsidy or their eligibility or the age criteria, it then became a flat rate. So that's maybe the one big change in terms of the shape or the way in which the subsidy operated. So you see that 750 flat rate taking place. Okay, in terms of the subsidy value then, more recently, so from March 2022, let's call this, I guess, like post-COVID period, it was readjusted, but at a higher amount. There is a mistake here. So this graph does have a mistake. It actually says that the plateau is at 1,750, but I believe it's supposed to be at 1,500 Rand. Nonetheless, it's 75% of income, and at the highest point, which is at 2,000 Rand, and then plateaus and again tapers down. Notice how the actual cutoff points, the 4,500 and 6,500 haven't changed, because that's what is or has been changed in the latest policy discussion. So this is from the SARS website, where you can see that the cutoff points in each category have changed, and the value of the subsidies changed as well. So it's 60% of income, but the cutoff points have gone up to a maximum cutoff point of 7,500 Rand. So I've been talking with colleagues at the Development Policy Research Unit at the University of Cape Town, Haroon Borat and Ben Stanwicks, about the policy. So this is from some of the things, some of the findings they have, and I'm putting them here because I think once you look at the policy in this way, you can, this sort of starts to make some understanding of this. So there have been policy changes, but my question is whether they have perhaps missed the mark. So the wage cutoff and claim value haven't been matched with inflation over time. And then the other challenge that the authors put forward is around the national minimum wage, which I think, last year, which is almost 4,500 Rand, and kind of matches this, the middle earnings bracket of the ETI and the claim subsidy cutoff. You also see with this kind of, without keeping up with this inflation and national minimum wage and other things happening in the economy. So in 2014, you have about 74% of your young workers, I'm talking about the specific target group, 18 to 24-year-old, 18 to 29-year-olds, apologies, who are eligible for the subsidy, but 10 years later, you've only got 60%. So your eligibility is not being maintained over the period. And if you run the numbers and you look at what an inflation adjusted wage cutoff would be, so it's looking closer to about 10,000 Rand. And these are, specifically about the actual values in terms of your income, but there are related changes, of course, as well to the subsidy value. Okay, so in terms of theoretical predictions, how is it supposed to work? So a low-wage subsidy, employment subsidy policy is likely to affect employment both on what we call the extensive margin, which is the number of workers a firm hires. So this is your unemployment, employment numbers, hiring or separations. And then at the intensive margin, and this is around the number of days worked or the number of hours worked. So if you can imagine somebody who is working part-time and now a company receives a subsidy, now they can, afford to employ them full-time because they have the subsidy, which enables them to do this. On the extensive margin, how it works is the cost of employing a young, low-skilled worker decreases. So a firm who is cost minimizing and hires different types of workers can consider with the subsidy that they are receiving to employ more, and in this case, the preference is for and targeted to additional young low-wage workers. On the intensive margin, as I mentioned, the firm could increase the number of hours for the young low-skilled or low-wage workers or for a longer period of time. I mentioned this earlier where there's actually quite high turnover. The number of days worked, the typical job for someone in this age and wage category is around 182, 183 days. So another way that the policy could affect change is actually increasing the number of days that a young worker is employed. So in the context of South Africa with high unemployment, what we're really looking for is change on the extensive margin. We want to see the numbers change in terms of the employment, but it's quite possible that there are changes on the intensive margin. There is quite a lot of literature, predominantly from the developed world, a lot also from Europe on the use of wage subsidies. And there are two kind of pieces of work that kind of lead us to believe one thing or the other. So in the first case, because labor demand is more elastic than labor supply, the earlier literature finds that wage subsidies lead to higher wages and therefore no employment increases, right? So that's so in terms of theory, we understand what it does, but in terms of practice, in some contexts, they found that actually it leads to higher wages and no employment increases. But then I would say in the more recent literature, in some countries, they've seen that if there's limited impact on wages, then there is a room, in fact, for employment impacts. And this is something I hope I get a chance to point out to you in a short while as well, because it's something we see in the South African context. But what the last thing I wanted to kind of mention on the slide is that actually these are kind of contradictory, right? So if you were just if you just to look at the international literature and say, well, is this policy going to work or not? You say the evidence is mixed. Maybe. Yes, in some cases, no, in other cases. Some may question, well, how do you design a policy for success? Or how do you ensure, what is the best design of this kind of employment or wage subsidy policy? And these are two conflicting findings from the international literature. I believe this was from Sweden. But the one author tells us that, that this kind of subsidy should be temporary and targeted in order to be successful. And this is kind of what we have in South Africa. And the other authors tell us that, in fact, subsidies should be all-encompassing, so everybody, and it should be permanent in order to be successful. So in theory, the number of jobs and hours worked could increase, but international cases show some mixed results, and they even have mixed guidance on how the policy should be designed to really reach these employment results. I say this is a quite well-researched policy. There's there are quite a few papers that came out subsequent to the policy start. There is a lot also written before the policy start. I've chosen to focus here on what's been written after, because it's sort of an evaluation, if you want, of the policy. So maybe the first piece of research that came out of UCT was using survey data, and this kind of shows that there's no change in the probability of youth employment. And they look at this first at 6 months after the policy inception. They look at this again in 12 months. And then there are a couple of papers looking at, I guess, using a little bit more in terms of kind of legislation. And conclude there's no improvement in youth employment, and put forward some ideas. There's some studies that look at, or the study that looks at the ETI and makes a comparison with other countries, I think Australia, somewhere else, and kind of makes the claim like based on its design, it's unlikely to succeed. It's an interesting study from the Vaal Triangle that surveys local businesses on their perceptions of the ETI, and it's almost unsurprising that all the businesses report while saying, the employment tax incentive, a tax incentive is always great, that they really like the policy. Some don't even use the policy, but I guess they like the idea, so they think it's really good. But even then, they think that the effectiveness might be limited, and this is because of skills by young workers. So I didn't get into the details of this, and it slipped my mind, but skills is a good point, right? Because I guess one of the interesting things about the employment tax incentive or then this policy is really it's working on the demand side of the labor market. We have a lot of interventions in South Africa that look at the supply side, skills, education, and matching of jobs and skills and workers, but this is on the demand side. National Treasury has a descriptive analysis, and I mean it compares to some of the numbers that were in the policy paper, but I mean ultimately that the take up or the finding that take up was higher than what was estimated. I had a research paper then in 2017 that I put out at the firm level, looking at youth employment across all firms. And here I used tax administrative data, which proved to be, and I still think is, probably the most useful data set to look at the changes in employment, because the subsidies channeled through the tax system. And so we see some increases in youth employment, mostly at the small and medium-sized firms. It gets a little bit more complicated for the very large firms. And for those who are interested in whether there's been any displacement, that's not something I find. I don't see any decrease in non-youth. So I guess the later work, the later work looks similarly at the policy and has similar findings, kind of no aggregate employment or some small improvements in very specific sectors or very specific firm segments. I'm going to talk more about the results on that 2019 paper. The other one I want to mention here is this paper by Marcellin, who looks at firms, the effect of firm profits and investments, and they kind of see that firms who are claiming ETI expand their investments and profits, but not actually jobs, right? So, one question may arise in terms of, firms who are claiming, what are they in fact doing with the funds they're receiving, the subsidy they're receiving, if they are not claiming any jobs or creating any jobs. Yeah, I'm going to get into my own work in a bit. So what else is here? So there's a little bit of work, I guess, more recently on the small or smaller businesses, small, medium, micro enterprises. So there's one study, it's actually a thesis, I think it's a master's thesis, on the low adoption of the policy by small businesses. And again, this is something that I also find. And then again, a later article finding that this employment effect who you're seeing in this, not even the whole target group, your 18, 29-year-olds, but even this just 18 to 24-year-old group is in fact driven by micro enterprises, very small businesses. I think that might be the only paper that I've seen that actually finds some displacement effects. And then there's a recent paper by Andrew Donaldson that talks about the potential reform for the ETI. I think it came out late last year. And then a more recent one on design, or looking at the specific factors. Now, I'm going to give you some key takeaways from all of this, but what I want you to take away from this now is that there's actually quite a bit of work being done. I have even one more slide. There are some unpublished pieces, and so if you read the literature, there are a couple that are there, and I'm going to leave these. Again, you'll get this information, but it's nothing different from what I've mentioned from the other studies. So in terms of some of the results I want to share with you, so here are some summary statistics. This is from my own work. So this is about the total number of employees or eligible workers and claims, and then number of eligible firms, and then those who actually are both eligible and then claim the subsidy. So I looked at these numbers again, and was reminded that actually and against these kind of policy changes that I was thinking through, is that over time you see that the number of claiming so ETI eligible workers decreases over time, and then ETI eligible firms decrease over time because that's where they work, which makes sense. There's an increase in claims, and so you see this kind of percentage increase. So the policy might be more popular, and I think after 2016, it was the first renewal of the policy. And so firms know that it's going to continue. But in terms of, related inflation readjustment, that hasn't happened. And so the actual eligibility is decreasing. I think the other thing I wanted to mention on this kind of, let's see if I can go, yeah. So at the share of eligible firms claiming. So this is a percentage share of claiming ETI eligible firms who are claiming in comparison to the total number. So you've basically got less than 30% or 1/3 of all firms that are, that are eligible, but who are claiming but are eligible. So it's not this first number, but the second number. And then the take-up rate kind of, stays very similar along this line in terms of the number of firms. I put this graph together earlier, so let me see if I can try and explain this to you. So a lot of the findings, and as I mentioned, was around small and medium or micro, small, medium-sized enterprises. And what I wanted to do is compare, in this graph, show you some of the results that I have, on this kind of breakdown. And so the lines tell you about the take-up rate, and the bars tell you about the amount that's being claimed. So maybe unsurprisingly, you see that these very large firms, have this really high take-up rate. So each bar represents a different year. So this is 2015, and they kind of claim some more, and then some more again. But that the actual amount that's being claimed is not a whole lot for the small firms and micro-sized firms, and then the take-up rate, which is this line, is also quite low, and then the take-up rate for the very large firms is quite high. So I think the eligible, the very large firms kind of maintain this take-up rate of nearly 70%, and while the micro firms remain kind of below this kind of 25%. So there's let's call it unequal participation across firm sizes. I think this talks a little bit to this kind of persistent, maybe barriers. It's not, this is until 2018, but I guess there are later studies also that, look at this kind of firm size as well. But there might be these persistent barriers for small firms. And this is something that I kind of bring up in my policy discussion. So in terms of the two margins on whether the policy kind of worked or not, I mentioned to you that the policy could work along two lines, along the extensive margin in terms of employment and in terms of unemployment or employment and entry and exit. And then the other one is around earnings or number of days worked. So these are the graphs from my research on this. And this is actually in fact using PALMS data or survey data. So what you want to see is this kind of, the policy year is year 0, and what you want to see is kind of this jump, which we do. So we kind of see in year 2, we see a little bit of this jump in the number of folks employed, but it kind of comes down again. So you'd conclude from this graph that there's really been no average kind of employment increase. For unemployment, again, you want to see this jump and this kind of decrease in unemployment. And it kind of looks like it's, decreasing, but maybe not a whole lot. Then in terms of, because initially it kind of starts off with this maybe more hiring subsidy. So we look at the number of new workers or the number of hires, and then we look at the number of separations. So, potentially workers are staying for longer. And here, some mixed results, but we think, there might be some increase here and a decreased trend is here, but I guess not, but I would call statistically significant. Then Again, now on this intensive margin, right? So again, I mentioned this about earnings and job duration. Here we look at earnings in more detail, and we do actually see this increase in earnings. Kind of looking at job duration, it kind of jumps around a lot, so we don't trust this result too much. It's not super clear what's going on here. Where we do see increases, in fact, in this kind of job duration. So what I mean by this is the jobs, the number of days work actually increase is in some industries where take-up is high. I haven't shown this here, but it is in one of the papers. I think one of the more interesting things that I haven't spoken about a whole lot previously is this kind of results by gender. So here we see actually this kind of increases in employment for women and kind of mirrored by this kind of decrease in unemployment for women. And this you see, I guess, maybe let's call it older in this category. But overall, this is, kind of a really interesting result. For men, I've got the same kind of breakdown categories, all 18 to 24 and then 25 to 29. Here you can kind of see it's a bit small, but you guys see this kind of more upward trend. So this kind of increase. Now, this is what I meant when I mentioned early, kind of like at the beginning of the presentation when I said that there's a possibility that in some areas of research or in the earlier literature, they kind of find these earnings increases, which means that there's no employment increase. And then the later literature finds an employment increase and no earnings change. And here within the same group, within this total, this whole population, we see that these effects are different for these groups, right? So if there is an earnings increase for men, which is what we see, we don't see it mirrored in employment. And now where we see this employment increase, more jobs for women, there isn't a related earnings change. So, one way to think about it is that the subsidy is working better for women than it is potentially for men. So what do we know? There's actually I think there's a lot of literature, and the policy is being examined from lots of different angles, from the tax angle, from economics, accounting, law, I guess also political science. I think something that we know is that the ETI by itself is not going to solve South Africa's youth unemployment problem, and other measures such as supply side measures. We're thinking about education, skills development, training, need to continue and perhaps expand in terms of thinking through sustainable employment for the youth. But there are a couple of things that we don't actually know. So we don't know much yet about the long-term impact. So if I was a young subsidized worker in 2014, where am I now, 10 years later? Am I still employed? Am I more likely to be employed? There is a team currently at UCT working on this question. I've a few times been asked by Treasury colleagues about the impact in SEZs. If I remember correctly, there was an age criteria removal for SEZs claiming the subsidy already from 2019. I haven't seen much literature on that. I think that also would be interesting, kind of in a contrast or a comparison way. I've seen questions around whether it's possible that ETI could improve compliance around the minimum wage. I think this is a super interesting question. Also because the ETI now kind of sits slightly differently towards the minimum wage. I think there's a couple of other methodologies that could be tested to kind of understand, but there are some severe challenges with estimating the policy. For those who are inclined, I'm happy to share more details about this. And then, thinking more about this kind of training or without training, or maybe the quality of the job. So is somebody who was a subsidized worker but didn't receive training, and then compared to a subsidized ETI worker who did receive training, how do they compare? Are they still employed? Is there a higher likelihood, or are they in better jobs? So these are some of the key takeaways, and I pulled this from actually all these articles. So these are not my own, just from my own research. I have 3 or 4 pieces of research here, but this is from the larger group. I think the first story is that there's limited sort of aggregate impact. So if you look at this kind of overall numbers, and I think this is something we know, right? If when Stats SA releases their unemployment numbers, we know unemployment is still a severe problem, right? So there's not surprising that there's kind of like limited aggregate impact. But potentially in specific subgroups or specific firm types. I mentioned this already, this non-employment effects. So this is one study looking at kind of firms who are claiming, who are reporting kind of higher profits and investments. I think this is something that might need to think a little bit harder about. And so I suggest something in the next slide about this. So there are some earning gains. I showed you that there was some increase in earnings, specifically then for men. And then this, kind of tells us that, it's almost expected that there couldn't or wouldn't be large-scale job creation. Uptake from small businesses quite low. I think, some of the research tells us this is about limited awareness, maybe some of the barriers in design, maybe it's hard to kind of comply, or administration of the policy, or kind of making the claim is quite cumbersome. I mentioned then also, one of the, I guess, the more recent work by DPRUs on this kind of erosion of the value of the subsidy. And this, I guess, also talks maybe to reducing its effectiveness. In terms of displacement, I think the majority of the research kind of finds that there is that there's no effect, but it can't be ruled out. At least there is at least one study that kind of finds that there is some displacement of older workers. I know this is the real big concern when the subsidy was initiated in discussion with the labor unions, but there isn't a lot of evidence for that at the moment. So in terms of a way forward, one way to think about this is to adjust subsidy levels. So maybe the first thing is to, adjust subsidy levels to account for inflation and minimum wage changes. So kind of keeping abreast of, what's going on. I guess like a little bit in terms of policy coherence. I think there's also a suggestion to kind of review the, relative subsidy compared to capital costs. And I think this also talks to about the kind of, a lot more incentives, tax incentives go towards capital rather than labor. I think there's room to enhance the take-up of small and micro enterprises, small businesses. This is kind of where maybe more clear that there is a change happening, where we see that there are jobs being created, and maybe even less costly to the fiscus, because it seems that they're not even costing, they're not claiming so much. Perhaps they could claim more. So could we kind of, balance this out? Could we kind of reduce what we call, let's say, deadweight loss, so claims by big businesses, whether this is through improved targeting, or this kind of outreach campaigns, or actually just, putting a cap on the subsidy and saying, businesses can claim at most X amount. I know this has been, this was in the policy discussion some years ago. I still think, it needs to be considered. So I think refining targeting mechanisms, maybe looking at youth who are at most risk of long-term unemployment. So this is, maybe to understand it a little bit more in terms of that segment of the labor market or society. And then, I think the research needs to be done to understand this, but I think integrating complementary interventions such as skills training might be both beneficial in terms of the kind of long term, in terms of the kind of job growth, but it also helps address kind of, some of the employer concerns around, well, we get the subsidy, but it doesn't actually help us because the skill level is quite so low. And then I think in terms of monitoring and evaluation of the policy, I think this is kind of ongoing. It's kind of, real-time tracking of this. I know from the time I looked and worked on the tax data on this, I know the form has changed, the tax form has changed. Actually, a lot more detailed information available to unpack the policy. And I think this is, still really worthwhile. And then I think this talks to the kind of first point about micro enterprises, but looking at, the barriers and, the things that kind of discourage firms to actually participate and claim the subsidy. In some ways, leaving, why are they leaving this kind of money on the table? I recognize that, policy reform is hard. It's easy for me to say, these are all the things that need to be done. But I think there's a lot of evidence and, maybe we need to think a little bit harder about the kind of political will to change and improve. Are we a little bit comfortable that we have a policy that we have a policy, we've done something, rather than, is it working and can it be improved, and or how do we make it the best that it could possibly be, and or how does it actually really resolve the, the challenge that we have, youth unemployment challenge. It's not in the kind of discussion around the VAT increase earlier this year in South Africa, I read at least one commentary that suggested that the ETI should be cancelled because it's a costly policy. It's not the costliest policy, but it's definitely not negligible. And in the current fiscal space, I think we start thinking a lot more about trade-offs. And so I guess the kind of question remains, how do we get this higher or improved gains for this tax expenditure that we have? And that's all I have. Thank you.
Thank you, Amina. Now I'm going to open up the floor for questions and comments, and let's just give Amina a round of applause, please. Thank you. I see there's a question already. There's a hand up. Julia, I see you've got a question for Amina.
Yes, I've got a question. I wanted to ask concerning the age. I see that the age is between 18 and 29. And I know that the South African National Youth Skills Commission Act, they are actually defining youth between 15 and 34. Knowing the persistent problem of youth unemployment, why that age bracket, if I can ask? And at times we find it in Namibia that when a student graduates, sometimes the job market is just not accessible and no employment opportunity. And so the age also increases. I'm very much interested in the age. And then also we wanted to ask, for the past 10 years, has there been any correlation between skills improvement, youth tax, and the labor market? Because at times we do indicate that young people do not have the experience, or they do not have the necessary skills. But with the youth tax incentive, have this improved? Because I see that you are still speaking about integrated complementary interventions after 10 years. And also, how have the labor market evolved, looking at entrance requirement positions? Because at some point we need to think about lowering some of these entrance positions, because In Namibia, we still find it that we have 5 years experience, and this youth tax incentive caters sometimes for 1 or 2 years or 6-month experience. And how have it evolved in terms of these requirements, entrance requirement? That's all from my side, and thank you.
Thanks, Julia. I don't see any other hands. I think, Amina, you can answer Julia's question.
Yeah, sure. Thanks so much, Julia. I didn't realize there were folks who are outside of South Africa on the call. So super interesting, to have somebody from Namibia ask about this question. Good question about this 15 to 35 versus 18 to 29. I was tempted to just kind of flip quickly through a paper and find this graph for you. I guess the basic idea is that the unemployment rate is actually just much higher for those between from 18 to 29. The unemployment rate for those over the age of 30 is much lower. So that's if you really want to target this kind of where the problem is, then this is what you use. And then in terms of how the labor market has evolved, I mean, I hear you in terms of the entrance requirements. I think these are really at the bottom end of a kind of income distribution. These are those earning kind of I guess now less than 7,500 rand. So it's kind of like the entry jobs, the low page jobs. I haven't looked a whole lot kind of in terms of what these requirements are. But I think this kind of talks a little bit more to the supply side question in terms of, are the skills being matched to what the job market is requiring, like you say, 10 years on. I wonder if there's somebody I didn't realize, I'm going to throw this out. I don't know if I wonder if there's somebody from Zimbabwe on the call, because I believe Zimbabwe implemented a similar policy. But I see there's another hand.
Julia, I hope you are covered, and then we can take Isaac's hand. And there's another comment on the chat, which we'll take after Isaac's question.
Thanks. It is covered.
Thanks, Julia. Isaac, you can come through.
Thank you, Chair, and thank you, Amina, for the presentation. I think mine is not a question, but just a comment. I think on the section where you were looking into the future on the SEZs, in actual effect, there is an upcoming report on the assessment of the South African SEZ policy framework. It's being done under the World Bank, and they also evaluate the employment tax incentive. So I think it will be out sometime in September. But one of the findings there is that actually there has been very little or less claims from the SEZs, particularly because the threshold is quite lower than the earnings in the SEZ, and therefore many of the SEZ companies are not actually utilizing that facility, and its impact thereof is actually lower than what would have been expected. Thanks.
Thanks, Isaac, for your comment. I think there is Elvis on the chat. Elvis, would you want to come in? And then we'll take Najwa shortly after your question.
Yes, thank you so much, Anita. Thanks a lot, Amina, for the presentation. I posted a question in the chat with respect to how the estimation, I saw you use the triple D technique, and one point that I was raising to check how you'd have controlled it for is the spillover effects across the groups that were included in the estimation, and how the heterogeneous treatment effects were also controlled for that. The background of that question is that as we move from the first, second to the third order differential levels, that technique largely controls for for the confounding factors, as well as it improves the credibility of the causal inference. But in terms of how then the heterogeneous effects were controlled for is what I'm just rising to check if there are any insights on that. Thanks.
Good question. Maybe you missed my disclaimer at the beginning about digging into some of the details. Let me think. So let me look at your question in the chat as well to remind myself. So in terms of the triple difference, it's an intention to treat estimation, so those who are eligible for the subsidy, and then the other two control groups are those who are not eligible. The one eligible, so you've got two eligibility criteria. One is on age, so you can look at those above the age category, and wage, right? So you can look, at those above the wage category. So I think it's not a perfect methodology by any means, because you might be comparing somebody who is earning 2,000 Rand to somebody who is earning, let's say 7,000 Rand. So outside of this, I look at the first period when the subsidy cutoff was at 6,000. And they're very different jobs, right? Or they might be very different kind of skill levels. Somebody was earning 2,000 Rand, somebody was earning 7,000 Rand, right? So the one thing we do is do these kind of robustness checks to see if we adjust those amounts. So we make it a smaller control group, we make it a bigger control group. Do we kind of see some of these spillover effects? So that's one way of doing it. And then in terms of the heterogeneous treatment effects, they were subgroup specific. So that's, sorry if I didn't mention this. Yeah, I'm happy to talk more with you on these technical details if you like sometime.
Thanks, Amina. Elvis, I see you've got your thumbs up, which means you are covered. And Najwa, you can come through with your comment or question.
Thank you, Salam, Amina. I have a question and a statement. So when we look at the ETI, right? My statement really is about the fact that ETI is not a sufficient condition for labor absorption or new demand in our economy. And so when we are looking at the effects of the ETI in isolation from the context, the South African economy's context, I think that it will always give us skewed results or mixed results rather, yeah? And so my question is about if you're aware of any longitudinal studies that have been done. So large firms, there's a higher uptake of the ETI. But are you aware of longitudinal studies that actually track where those people have been with a large firm, they've benefited for 2 years, what happens then? Do they go to another firm and get the ETI there again and start the process? Are there exit pathways and are they does having participated then create a higher level of stickiness in the labor market for them to be able to get back in there again? So I just think, we've had this discussion about the ETI for a long time. We have had much research done about, on the issue. And so I'm really curious whether we've taken the big step, and the big step for me is to do the longitudinal study to understand, given South Africa's context and the reduced demand for new labor, what the actual impact is. And then the third part, just about, it is clear that if South Africa is looking towards small businesses as the answer, then it does beg the question of what are we willing to do to redesign the ETI to make it easier for small businesses to take it up. Thank you.
Great question. I take your comment on the longitudinal studies. I've seen a draft of one. It's not published. So I said what we don't know is this kind of long-term impact. So there's a team at UCT who are working on it. I think they're quite, at least I've seen a full draft, so I expect that it would be out, quite soon. but I would welcome more research in that area, let's say, to understand this. And I think this is that point, right? So if one of the challenges, if we believe that one of the challenges in the labor market in South Africa is actually that first job, is like just getting into the labor market, and then once you're in the labor market, you're sorted out. If we believe that's the issue, then we should see positive results in the study that's coming out. It's not published yet, so looking forward when to having that. I'm not involved in it; it's some other researchers, so I haven't spoken about it. But I think we'll know before the end of the year at least. You had another question about small, medium size. I mean, I think my maybe more like personal view is that I think this could be really great for small, medium sized enterprise, because I think it's kind of, it's both supporting that business and the kind of growth of that business, but also getting the kind of employment, improving employment. That's kind of where you see the increase in the numbers. I guess the struggle there is with the number of unemployed young people in South Africa. An additional 1 or 2 jobs, even at 10,000 firms, 10,000 small businesses, is just 10 or 20,000 jobs. So that's kind of something to think about.
Thanks, Amina. I see Julia has a hand. Is it a legacy hand, Julia, or you've got another question?
I've got another question. In terms of the employment reduction, and I'm making reference to the earlier slides that you had, is this measured in accordance with other employment interventions and the traction also they have, or is this an isolated measurement in terms of unemployment reduction? It's just a question, and I'm just wondering the effectiveness of other interventions also aimed at fighting youth unemployment.
Right. So in a lot of the research that's done, not just by myself, but the others that I've mentioned, where they're kind of trying to make some causal claim. So they say, because of the ETI, something has happened in this direction or in that direction. What they do is assume everything else kind of remains in place. So I think if you're talking about other policies happening concurrently, which, like you say, there can be quite many. But if they're kind of ongoing for that whole period of time, there are some criteria that you need to look at. The only time that this gets tangled, this kind of analysis gets tangled, if you've got 2 different policies doing different things starting at the same time. This is not the case for the ETI. Your other policies, I forget now what it's called. The one where where firms are subsidized for training programs, that had been going on before. So these kind of analysis, but it's a valid question. Thank you.
Thanks, Amina. I don't see any other comments. Are there any other comments or questions for Amina? I don't seem to see anything on the chat, Amina, and I don't see any hands being raised. I think from my side, I'm just going to say thank you for such an insightful and exhaustive presentation that seriously gave an insight. Thank you so much. And what I would like to ask is that you please take a moment and rate us. How was the presentation and how was the whole session? I'm going to put a link on the chat, and then if you can just do that and just rate how we are, because we are always in a process of trying to improve where we are in terms of these webinars. And the presentation will also be shared on our portals and platforms. Thank you so much for joining, and thank you so much, Amina, for such a good presentation.
Thank you so much for having me. Thanks so much for the engagement. I hope you found it informative.
And thanks as
Okay.
well to you, Amina, for coordinating this. Thank you so much.
Thank you.
Thank you. Have a great afternoon.
Thank you.
Thank
Bye.
you. Happy Friday. Bye.
Thank you. Thank you. Bye.
Thanks, everyone. Bye-bye.
Your destination